Today, a Senate committee voted to advance Kevin Warsh's nomination to become the new Fed chair. The president's pick for the position will now head to a full vote in the Republican-controlled Senate. North Carolina Senator Thom Tillis earlier vowed to block Warsh's nomination, but ended up voting in favor after the DOJ dropped its probe into current chair Jerome Powell. So with that as a backdrop, it's time now for Mike on the Money. The Federal Reserve this afternoon leaving its key interest rate unchanged in a range between 3.5 to 3.75%. Our financial expert, Mike Giordano, with Williams Wealth Management, here to break down where the rates go from here, especially, Mike, with that change in leadership. Were there any surprises from today's decision, though?
Not really in terms of the decision that they made. The real surprise was that you had 4 dissenters. So you had people saying, hey, we don't really want to be favoring maybe rate cuts. We want to be more like neutral. You have one person that definitely wanted a cut today. So that was kind of a surprise. That's the first time you've had 4 people dissent since the early 90s. The way this typically works is that you have a lot of consensus and then maybe 1 or 2 people might dissent, but generally everybody is swimming in the same river. But in this case, you definitely had some diverging opinions.
We mentioned Warsh's nomination just a moment ago. This was likely Jerome Powell's final meeting as chairman. What should we expect from that potential change in leadership?
Yeah, it'll be really fascinating because Powell said today that he's going to stay on. He can stay on as a governor for another couple of years. And while it's typical that when a chair finishes as chair, they end up just dropping off the board, he was like, no, I'm not going to leave until all of these legal matters have been fully put to bed. His concern is basically over the independence of the Fed, and he's like, I want to preserve that, and so that's the reason why he decided he's going to stay. But he didn't really say how long it's going to be, so we have really no idea. But he's just trying to, maintain, I guess, a little bit of leverage in that situation. But that was, in terms of Kevin Warsh, it's really hard to know how he's going to play it because it's 12 people that come together to form this opinion. The chair definitely influences it, but he's going to have to get his colleagues on board with whatever move he's looking to make.
Understood. Let's talk about what the Fed does not directly control, and that's long-term rates. Those are moving higher. Why is that?
Yeah, long-term rates will move higher off of a couple of things. The Fed only controls that overnight rate that banks deal with, not necessarily what we're dealing with. What drives long-term rates is inflation and growth expectations, and certainly everything that's happening in the Middle East is driving up oil prices. That's driving up inflation expectations. And then you have like the banks recently coming out and saying, hey, you know what? The economy's been holding in pretty well. The labor market seems to be stabilizing. So those 2 factors are kind of what's driving up long-term interest rates.
Folks certainly want to know what this means for their bottom line, what it means for their wallet. Big picture, how are these higher rates affecting home buyers and retirees?
Yeah, so home buyers and retirees are kind of almost on separate aspects of this. If you're looking to buy a home, higher long-term rates, higher 10-year treasuries is driving up mortgage rates. So now you're seeing mortgage rates in the mid-6s as they had floated down just under 6, but now we're in the mid-6s. So that's the problem for home buyers. Now for retirees, people that are looking to have bonds in their portfolio, give them stable income. It's nice when interest rates go up because as you buy new bonds, you're getting these higher interest rates. But the problem is all the bonds you already have, they're going down in value as interest rates go up. So you really have to be cognizant of how you're positioning your strategy, what types of bonds you're buying, how long a duration those bonds are. It really matters in terms of trying to figure out how you're going to get your income and not have too many losses within your bond portfolio.
Mike Giordano with Williams Wealth Management.
I was so happy being here with you. I mean, I'll tell you, real
couple sports guys, huh?
It's a couple sports guys. My son was like adamant he wanted to come tonight, and I think it was because of you. I don't think it was the interest rate thing. It was either you or he heard the
interest rates.
trucks.
Yeah, that's fine. Yes. Okay, well, hey, maybe we can get him in here to do some high school football with us on Friday nights.
There you go.
We need all the help we can get.
Hillcrest High School.
Mike Giordano, appreciate it. Bradford.